Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's interaction, we're going to have a round table conversation. My friends Joe and Becca are in on this with me. It's a great way for us to be able to address misconceptions, share best practices, have discussion from the consumer side, the professional side. It's all on the table. I hope that you enjoy. Awesome, guys. So this is our second installation of the round table. Thanks for being here. Beautiful Becca, my handsome buddy Joe, Eagles fan Joe, like we were just kidding about. How are y'all today?
Doing well.
Yeah, absolutely. Getting over a little head cold, but you know, when the elevation's so high, when we're soaring as eagles, it helps. It helps.
I'll tell you what, if you could put me on a tangent so quickly, Joe. I'll share. Y'all would both be interested. One of my favorite, I heard it as a young married man. One of my favorite sermons that I heard was about the Eagles. So you would appreciate that. We should talk about that sometime. I don't know if I'll jump in on it right now, but there's a preacher did a real interesting study on eagles, and there were a lot of applications, and eagles are mentioned in Scripture. So I'll put a pin in it right there, but that's where my mind went, so I said it out loud. and that's cool, right? Because we jump on here to have conversations, but we're in the background having conversations. Me and Becca are, me and Joe are, y'all two are. And I'm saying that to say that I've really been thinking since our first roundtable, our infinite banking roundtable discussion that we had a while back. Here we are again. We've got more planned in the future. So on that note, for everybody that is listening, be thinking about things that you'd like to run by Becca. Be thinking about things that you'd like to question Joe about that he brings up, right? Hopefully you've read Becca's book, all these different. So we're going to be looking ahead. We already have multiple interactions scheduled for this IBC roundtable. So put stuff in the comments if you want us to address something. We'll do it. We'll talk through it, and we'll glean from everybody's perspective, which is really cool. But again, on that note, talking about the philosophy behind how this infinite banking roundtable got started, and I've been thinking from last time to this time, you know, Camelot was this ideal, beautiful place, right? And there was King Arthur, and there was Sir Gawain, and there was Sir Galahad, and there was Sir Lancelot, and all this stuff. Really, if I haven't mentioned it to y'all, I feel like I did last time. I'll say it again if I did. I've read Howard Pyle's version of King Arthur and the Sword and the Stone and all this stuff. And that's the theme, right? Was that Camelot was this hub. Camelot was this place that everybody could come back to be able to be around their brothers, to be able to be around their peers, to be able to share their adventure stories, to be able to ask questions, to be able to better each other. They had this round table where everybody participated. Everybody had their strengths. Everybody had their weaknesses that they were working on. There were conflicts. I'll say that, y'all. Y'all might have different views than me on some stuff. I'd love to be able to just, unreservedly, y'all share those, me share those, right? So sometimes these guys didn't even get along. I'll tell y'all what, I've even thought about bringing people on here that I know that for me, they do not share the same personality types. And I've been toying with the idea of intentionally bringing them on because it challenges me. Does that make sense? So that's part of my philosophy behind us having these discussions together is that we will have different perspectives. We can even debate through stuff. We can converse through stuff. I mean, we're friends. Don't get me wrong. Even the people that I know and recognize have different personality types than me. Maybe their voice is this way. Maybe their approach is this way, and that's not my way. But we're better together. And much like the knights would go on their journeys and be doing things like, Becca, you've written a book. I've not written a book. That's a quest that you've went on. And you've got other things in the pipeline. You've got other gifts to bring to bear. Same thing for you, Joe. You've had a lot of visuals, and we've had a lot of conversations on the channel as well, all of us here. But yeah, I've just been rolling the feel of this interaction around in my mind since we got together last. I've really been excited and looking forward to more. So I'm just trying to put my philosophy out there of where I'm viewing this roundtable is, where it's going. I want y'all's feedback. And again, I'm trying to leave this open to the wide world to say, hey, here's Camelot. And Camelot for me is, while we're talking about infinite banking, and we could talk about other stuff. I mean, I think between the three of us, we've talked about marriage and parenting and business and just the scripture, all kinds of stuff. And I love having serious conversations about whatever, as long as it's serious. And it's going to be fun to do it together. And yeah, I'm excited. What do y'all even think when I try to describe that? Because it's an ongoing thing. I'm trying to ongoing describe where we're at. What do y'all even think or feel about that? Ladies first.
I come from an agricultural community, and there's this idea of cross-pollination of, you can grow the same crop year after year after year, but I can't go into the details because I'm not a farmer. I've just heard it talked about. But when you get around people that think differently, that maybe have different processes, a little bit different, genes that they're working with, you can kind of cross-pollinate, and both of you come out with something better, right? And so I think it's easy to kind of get in your own little echo chamber and just, oh, these are all the people that think just like me. So I think that's a great goal to say, hey, let's go out and let's explore and let's see what's out there. And we don't have to all think exactly the same. Let's come back and share what we found, because I think for all three of us on this call, I know for sure our pursuit is the truth, right? And so I certainly haven't arrived. I don't say that I've have a corner on the truth. But that's my goal, is to get closer and closer. So I think these kinds of conversations, definitely move us in that direction, and hopefully are helpful to people listening as well.
Awesome. What do you say, Joe? What do you think about it? What do you feel about it? I know you've been thinking about this round table. What's been in your mind about it?
A Bible verse, just iron sharpening iron. And as you were describing that, the round table, and the idea that conflict can happen in that environment, I think it's important. Like, if we take what Becca was just saying, that we're all seeking the truth, we should welcome conflicting views and viewpoints, and we should have. There's iron sharpening iron. There's a friction or violence to that, right? To allow both iron to get sharper, and that is the going back and forth and hashing out what's true and what's not. I think that's an awesome motivation and an awesome spirit behind this whole thing, just to say, hey, let's put it out there, let's see what everyone brings to the table. Let's throw some characters in there that might have a completely opposite view, and say what's true. And as long as everyone has an open mind, saying, I'm okay being proven wrong, this is where I'm coming into this conversation, help me find truth. And if we approach it with that open mindedness, I think a lot of cool stuff can come from this.
Awesome. So I appreciate y'all's feedback on that. And to add to the Camelot story, in that round table, there was this one seat. There was a particular seat. I don't know if y'all know this. If you don't, that's okay. But just follow what I'm saying. There was a seat called the seat perilous, and not a particular person was supposed to sit in there. So there was always this idea that there was an open seat. Don't know who it's going to be for. It's going to be for somebody, and we don't know when they're going to get here. So I'm saying that to say that I do have planned and scheduled, and y'all know this, and y'all don't know some of this, of other folks that I've invited to come on here and join us here at this roundtable. And I'm really looking forward to it, because in my mind, I'm thinking, oh, Joe, just wait till you meet my friend, and I'm thinking, Becca, you're going to love, and you're really going to connect with. So I'm excited. I'm excited for us. I'm excited for us. And yeah, there's that idea of the open seat at the round table. Okay, beautiful. So let's just kind of do like we would do text or phone calling, y'all. I'd love to start off with anything. So is there some type of, success or story that you've experienced here in the past week or so, because we talk on the regular, that you think would be beneficial to everybody? Has there been some subject matter that you've been rolling around yourself again? And here's the beautiful thing about the round table, right? It's like, we're consumers here first, right? We learned about infinite banking from a consumer's point of view first, and then professionally. So I don't care if we talk about the consumer side, the professional side, whatever. That's where I'd like to start.
Well, I have a kind of a fun little quote I got from a client this morning. I was in a client meeting, and we were talking about his policy had been approved. We were talking about next steps to get it put in place. And he just kind of started sharing his heart a little bit about why he was doing this, and, the death benefit, the generational nature of it was really important to him. And he said, the death benefit's kind of like a cheat code for the next generation, like in video game speak, right? And my boys play lots of video games. And if you're not familiar with that, you can get online and find these cheat codes, because there's sections that are really hard. I was the most pathetic video game player ever. Like, I had The Legend of Zelda when I was a kid in high school, and I'd come home and I'd play it, and I never beat the guy at the castle, like never, ever. And I just thought, well, I got real close until I got married, and I found out that was only the first castle, and there was like 15 more that I never. So I needed a cheat code, right? That would have been very beneficial to me. But I just thought that was a great way of thinking about, like, they're not having to start over at level 1, right? That we're gonna make some headway, and they can start so far ahead of where we started. And it's a legal cheat code. It's using your resources. It's smart planning, so that you don't have to fight the same dadgum bad guy every time and never get past the first level. I love that quote.
I do too. I wrote it down, and I'll go one more level. I say one more level. We'll see. All right, you gave me another idea about Camelot. Okay, here you go. Sir Lancelot was one of the knights at the round table. His journeys, his endeavors, his quests led to him having a son. And that son got to fight new battles, got to go to new territory. So I love that analogy. Okay, cheat code there, or it's, new generations tackling new giants, right? I love that. Mm-hmm. Okay, cool. Yeah, I definitely remember when cheat codes hit my radar, and somebody said, yeah, you could do that. And then there you have an unlimited supply of missiles now to fight the battle. So, okay, awesome, amazing. How about you, Joe? Any recent takeaways, questions, anything?
Well, I was going to continue in that same vein, if that's okay. A couple things. Oh, hold on. I'm taking a couple notes here. I don't want to forget. I like that. Like, it's the cheat code. And I wrote down, you got to start with the end in mind with that. The idea that this, he was sharing, his heart with you and saying this is like a legacy thing. Man, like, if you go back to Nelson's original work to say you have to think generations ahead of you. If you're thinking 10 years, 20 or 30 years, that's not far enough. That's not what he was talking about for long term. And it really, like, it's really starts to snap into focus when you think a second generation, a third generation. You start looking at decisions very differently today, because it's a lot like that idea of a laser pointer. If you move it just a little bit this way, 5 generations, you're hundreds of miles off the mark, because you wanted, something short term, something instant gratification now. To always be thinking through that lens, like, if I do this now, the repercussions, right? The interest that you didn't earn, you have to account for the interest you wouldn't earn that you'll never see. You have to add that into your equation to say, oh man, if I do this really short-term thing, because it looks really good in the short term, which is short term, I mean, relatively 30 years. If you're only looking 30 years in the future, that's short term. What happens at 31? What happens at 35? or 75 or 130 years into the future. Um, um, the next thought I had was, as you're talking about Zelda, I was more of a Final Fantasy person in my gaming experience.
All right, time out real quick.
First...
Real quick interjection. What was the first console then each of y'all played on?
Oh, Nintendo. Nintendo
Okay.
was the only one I ever had.
Okay, I'm an Atari guy. Cool. All right, sorry, just quick status check on everybody. That's great. Go ahead, Joe.
Yeah.
Sorry.
That was my dad's Atari. But
yeah, no,
yeah,
I get it. I
was a Sega Genesis. After that, I skipped the Nintendo. I was like, but Final Fantasy VII specifically, it was 3 discs. Back then you had to like change, it was on PlayStation 1. You had to like change the discs at certain points when you got through to made enough progress. And when you went to 1 disc, you couldn't go back. So I remember having this fear that I would miss out on content on a disc. And I had like the game, I forget, like the strategy guide or whatever the heck it was called, where it would walk you through, if you want to get all of the quests done, you have to do it in this specific order. Otherwise, it'll lock you out of certain parts of the game. And when you change the disc, it's like you can't go backwards to get it. And as I'm thinking through that, I was like, wow, man, that's a lot like this idea of opportunity cost that you can't see. Like if you didn't have to do that. You could go through the game pretty quick in like a couple hours and beat the game. Or you could spend the time in going through every single thing, capturing as much as you possibly could. And when you got to the end of the game, it was like, I don't know, this huge huge celebration to be like, wow, I finished the whole dang game. I got everything that could be gotten. Yeah, it's what the cheat code analogy is really interesting, because if you had a cheat code that had infinite missiles, for example, I think that changes the way you play the game. In not a great way if you're not careful. If you just dump that onto somebody, they just, I don't want to say waste, but they don't respect what they have. Like an example, I remember Contra on Nintendo. And if you got a certain gun that would like blow things up in one shot, but then you just put this cheat code in, so you had it the whole game, you lose the taste for the competition of the game. The challenge of the game is gone. So you don't learn along the way. You don't learn the strategy of the game. It's not challenging in the way it should. So I think there's a balancing act there. The cheat code is one part of it, but the blueprint to say, don't lose the respect for what Becca did or Becca's clients did to provide the cheat code, so you can then provide the cheat code for the next generation. I think that's really, really important and shouldn't be lost. Sorry, I went Contra, Final Fantasy. I'm all over the place.
No, I love it. It makes me have a question for y'all when you ask that. And I had thoughts, but I guess I want to ask the question first. So as infinite bankers, and I'm a dad, right? This is a real life scenario that I wonder for myself even, let alone for clients. And I think I have some of the answer, but not all the answer. Hence this roundtable discussion. How do we help children and grandchildren and our clients' children respect what has been set up for them? Because, Nelson had some family members, the way I understand it, okay, and he's not unique in this regard, that actively participate in infinite banking, and more of them are passive participants. I'm one of 11 siblings growing up. The vast majority of my siblings don't practice this concept, right? And here I am now, a father. How do I encourage my children to respect and appreciate and to steward well and to scale, like take the baton and go to the next level? What Lauren and I have started, right? What are y'all's thoughts on that part?
Well, one, shameless plug for Becca. Start with reading her book to your kids. today.
There you go.
And assign homework that they need to, yeah. Um, I think that's crazy to point out that Nelson, the guy who codified this whole thing, first off, he spent how many years building up this idea and codified it after he retired, essentially. He doesn't like the word retire, but he was no longer in like retail production. He was only producing for his family. He would not take on new clients outside of that. And then he codified this, and his family, some of his family is not saying, yeah, they're more siphoning off the system than contributing to the system type thing. Wow, that's a real, like, if you read his book in the very beginning, he talks about if you were, if you divided up all the assets equally across all citizens, within a decade, that original disparity would reemerge. Why? I think if people don't understand that right there, that's why people take a passive, either ignore this, take a passive approach, and very few actually take an active approach. The why is the manifestation of all of the problem. Yeah, it's if you the more you understand the manifestation, the result of the actual problem, I mean, the more you would want to take action to prevent that from you and all your future generations. Um, I suspect most of the people that ignore this or take a passive approach, they have no clue about the problem, and they have no clue of the manifestation of the problem in their life.
There's a scripture in Proverbs that has kind of come to my attention the last couple of weeks, but it's Proverbs 24:3, and it says that by wisdom a house is built, and by understanding it is established. I think I'm quoting that correctly. But I was thinking in terms of, I have several clients who heard this message and thought, yes, I want to do that. Like they saw the wisdom in it, right? But then they didn't ever really, and this is, some of this is on me, but didn't really pursue that understanding of why, and continuing to learn and continuing to build that out. And it's like it kind of fizzles. Oh yeah, I've got this thing. I can't. I'm not sure why I'm still paying that. All those kinds of things. But so I think that it's important to let people know up front. Look, you're going to see the wisdom, most likely. Not everybody does. If you have eyes to see, right? It's a possibility that you could see the wisdom in this and take action. You could build something, but that's just step one, right? We want to establish this. We want to establish a system that's not just for you, but it's for the generations following. And so I do think it's important to talk about it and to continue to learn and brainstorm even with your kids. Hey, what are some things we could do? What are some creative ways we could fund this? What are some creative ways we could use this? And I think that as you do these things, it becomes a part of how you do these things. And sometimes things pop up that you didn't see coming. Like for example, my daughter is 13, about almost 14, and has the opportunity to go on a study abroad trip in Europe over spring break. Okay, now that seemed like a pretty big goal for a 13-year-old, right? But she came home this fall and had gone to the meeting and was so excited about it. And it's a pretty pricey trip. It's, close to $4,000. I'm like, that's a lot of money. But we basically told her, hey, if you can raise the money, then we think it's a great opportunity. So she's so excited, motivated. She's making a list. What can I make? What can I sell? Who can I call? Who can I babysit? All the things. And then she came home a couple of days later and she was just distraught. She's like, Mom, I found out the first payment is due in 10 days. And she's like in tears on the couch. She's just like, I know I can do this, but I can't do it in the next 10 days. And it was like $1,500. It was not a small amount, right? And I was like, okay, time out, take a deep breath. I mean, she's just boohooing, right? Just take a deep breath. Listen, here's an option. Here's something we could do. You have this policy, and we could take a loan and have that money in a few days And then that would give you some extra time. And whenever you raise the money, you could pay it back. And she was like, what? Like, we can do that? Yeah, I mean, we talked to, she knew she had something over there, some kind of banking something, but that made it so real to her. And so I made her be a part of the process. Like, come here, let me come sit down with me. I'm going to show you how to do this. And then when the money comes in, I'm going to show you how to pay it back. And she was like, really? That was easy. But somebody, that wasn't really her that did that. That was actually my parents that saw the wisdom and said, okay, let's put this in place. Right. But so hopefully this will be something that gets established in our family through understanding, through learning, through experience of using what we have, so that it can be continued on. And, you know, it's like the thing, this is an invitation for people. It's an invitation to come be a part of something. You can't make somebody do it, right? And if they don't want to do it, that's fine. But it's kind of like the empty chair at the table. We would love to have you come and join us. Come join what we're doing. Come see, come be a part of this. I think that if you can get a taste of it, you'll never go back to the way you used to do things. It's different, yeah, but that doesn't mean it's bad. It doesn't mean it's hard. It just means it's unfamiliar. And I think so many times people associate something being unfamiliar with something being hard, and it's not the same. It just takes some understanding. It takes some time to learn, and then a continuation of using that and continuing to learn throughout your life. Joe, go ahead. I can see it. I can see the ideas.
I just want to, so I added a rule, which is taboo, to Nelson's rules, and it's share the blueprint. I think he would agree with it, because I think that's the point of the book. I think that's the point of the practitioner program. I think it's the point of, like, everything we're doing is sharing the blueprint. It's, you know, and I would encourage both of you, all of us, anyone listening, the journey start to finish, like, document the struggles, the doubts, document your rationalizations and realizations, document the rationale and the mechanics as you go through this. By doing that and sharing that with the next generation, like, they're going to see the same doubts that they have. And I would encourage you to have them document the same. So as you pass this on and someone says, oh my goodness, this, you know, something like rate of return, it's like I can go to the rate of return section of my family document that's sharing the blueprint, be like, oh, every single person before me thought that too, and realize that that's not important. Yeah, you can sharing the blueprint. It's so much of, I feel like social media nowadays is about the individual. It's about the product. It's trying to compare the product to something else that's familiar. And to Becca's point, it's not new per se. It's just new to you, and you're trying to put it in a box that there is no box for. Like, you don't understand how to value the dang thing, but you're trying to squish it in like the investment box, or the cash flow box, or the cash on cash return box, or the bond like asset box, or the internal rate of return box. So, like, it doesn't fit. You can't put all of it in the box.
All right, so I'll give you my shotgun, reaction to all this stuff. That client, let's say, Becca, that saw enough, animated enough to get started, but then slows down or retrogrades or falls behind or whatever, it just makes me think about the seed that pops up, but then the sun withers it,
Yeah.
Which made me just think, we all need to rethink our thinking. And that's a big purpose behind, podcasting, YouTubing, having these types of discussions so that we keep moving forward. But that was the mental image that I got, right. And we deal with folks like that, like right here at the end of the year, one big professional push that I'll say that I've made, end of 2024. And I was on a phone call the other day with another professional in the space, and we were talking about best practices. We were trying to help each other. And I told him, or I encouraged him to consider reaching out to clients in this particular fashion. Create a piece of content of some best practices, things that you wish you would have known 5 years earlier when you implemented IBC. Record that for everybody, but then personally, directly reach out to your clients and say, hey, I was thinking about you. I hope you're ending the year strong. I hope you start this next year strong. These are some things that I wished I'd have known in my journey a little bit sooner. Check it out. Let me know if you have questions. And again, that's casting seed right there. Right? I think that's a very valuable seed. I mean, if I say that I wished I would have known something sooner, I feel like that's very valuable to somebody else. And if I can collect half a dozen things like that and put that together for somebody else who could learn it 5 years earlier, oh, that's so good, I feel like. But then, personally reaching out to somebody and send it. I like voice memos, so they can hear my voice. And I like it when I get voice memos. I love hearing people. I mean, legacy wise, I feel like I'm repeating this, perhaps maybe I've said it elsewhere, but I have voicemails on my phone of people that are no longer with us. That's important to me to be able to hear a voice. But anyway, I think it means something if you send a voicemail to somebody, they know you're talking to them. And then you got that content or that thing that you were letting them know, hey, I thought about you and I thought you'd benefit. Now, we don't know what they're going to do with that. Not everybody messages me back. Right? And some might give a thumbs up or some might say, Jesse, and this has been my case. And this is why I was encouraging this other professional. Some have said, Jesse, you said that at the just right time. I'm dealing with this or I'm dealing with that. And it's just been this spectrum, right? Of, well, I lost my job. My wife got pregnant. I'm actually ready to get a policy on such and such family member because I want them to have a branch of the family bank. Just this wide range, right? Of not knowing, right? But I'm casting the seed, and these are the results. So that's also part of what you're talking about there. What it made me think of, and then I know this is a shotgun approach. Y'all covered so much ground there. I'm just sitting here listening. I'm like, so good. There's a verse that talks about, going back to the original question about kids anyway. Hey, how do we encourage kids to respect what parents started or grandparents started? Scripture says things, right, that I think point us to the realities. As much as we might not like them, Scripture says, the poor you'll have with you always. Can't change that. We can cast the seed. We can show people a different way to create financial certainty for yourself, to retain control over your personal finances by becoming your own banker, right? But there's still the reality of, well, there's always going to be the poor. And why is that? Because of choices and decisions and things like that. Now, I want to push that frontier as far away from us as possible. And when it comes to that conversation with your daughter, Becca, I had earlier today a fella say something about conversation with his son. His son wanted to do X, Y, or Z. And he's, after my own heart, it was really encouraging to me. I love how he said this. He said that he's taught his son to have an abundance mindset and say, well, we can buy anything. We just have to be able to pay it back. And I thought, oh, how good. We can buy anything. Yeah. We just have to be able to pay it back. Well, to be able to pay it back, you got to provide value, obviously. And that's what he had told his son. If you provide value, you create income, you can go out and do what it is you want to do. And then you got to be able to pay it back. And just while simultaneously encouraging his son to think in abundance, in the same breath, he's saying something about stewardship. He's saying something about being an honest banker and putting it back right. I don't know. It was really encouraging to me, so I'm sharing that with y'all as well. Y'all have covered so much ground. Go ahead.
Thought on that, Jesse, that I think is important is this gives you multiple uses of your money, right? So that account for my daughter is, or that policy for my daughter is primarily, the primary goal was to help her with college expenses down the road. Well, if we had put that in a 529, we couldn't have borrowed that money to go to Europe, right? But so now we're using that. It's got a placeholder in the future, but between now and then, we can use it for whatever we want. She might finance a car in a couple of years. She might, there's all these other things that can be used with the same dollars, and I think that's really important for people to understand and really powerful. That it doesn't just have to be earmarked for one thing, and you just have to wait till that moment in time to
our kids wanting cars, Becca. How's that feel? Our kids wanting cars?
I know, that's crazy. I'm like, I'm not that old, am I? I guess I am.
It's a wild thing. The other scripture, I guess, on that point, And it's something that I actively want to do. I do want to encourage, our children to respect and steward and scale what it is that Lauren and I have started. And Lauren and I are going to continue to do this, but we want to hand that baton off well. Scripture does also say, I think it might be in Proverbs as well, Becca, like the one you mentioned earlier. And I think it's even in the form of a question, or maybe it's a comment. I should just recite it, look it up. Anyway, it says, the crown doesn't endure to every generation. That's the human problem right there. So-and-so, the Bible says, did that which was right. Next generation did what was wrong. Right, wrong, right, wrong, 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 right. Just, just because we start something good, or just because a client sees this and says, oh yeah, that's wise, doesn't mean that they've got the understanding to grow it, to scale it, to cultivate it, to steward it. To your point about, okay, it's wise to start this thing, but then there are levels of understanding and implementing this concept of infinite banking for sure.
I believe that's Proverbs 27:23-24.
Thank you, buddy.
You know the condition of your flock, give attention to your herds, for riches do not endure forever, and a crown is not secure for all generations. If you don't pass it on, you don't pass the blueprint on.
Take care of it.
Yeah, you have to. It's like a garden. You have to tend to the garden. That's the difference between a garden and a jungle. Things are lined up this way and that way and this and maintained, and otherwise it's all over the place. It's a mess. It's like if you just let it go, the natural fallen world is chaos. It will revert back to chaos. You have to share the blueprint.
Yeah. Yep. Well, it's like Nelson said that go ahead.
No, I was just gonna. No, you go ahead. I'll remember what I'll read.
It just reminds me of what Nelson always said of, the policy owner's behavior is the biggest variable in all this. We can argue all day about, policy design or premium or anything like that, but really how you treat it is going to be the biggest indicator of how successful it's going to be. So again, back to tending your garden. This is not a, I mean, I guess it can be a set it and forget it, but it's not going to be as beneficial to you as if you learn how to use it and learn how to tend it, and learn how to care for it.
So I think there's a portion of it that is set it and forget it, meaning like when you pay the premium, what the insurance company goes and does, it's out of your purview. You do not have to worry about it. The contractual guarantees, you do not have to worry about. The death benefit, you do not have to worry about. The banking piece, the financing piece, that's the tending to the garden.
Yeah.
Right. You do this, you make sure you repay it. Right. Focusing more on cash flow than cash value. How many people focus only on cash value? They treat it like, your average investment account. I need a balance that's this big. Like, that's not what Nelson was talking about. He was talking about, go back to what I said originally, where it was like, you divide up all the assets. Within 10 years, it'll revert back. Why? And I think he used that example like to put a nail in the coffin to this argument. It's not about the balance. If everyone had the same balance, why would the disparity reemerge? Because the small group where everything siphons to understands about cash flow, not the balance. The small group has all the money flowing back to them, the direction and volume of cash flow coming back to them. Everybody else is focused on balance and return. Like, cash flow is paramount. Cash flow is like, if cash is king, like the balance is king, cash flow is the king of kings. And I don't mean that to compete with Jesus. I just mean put it where like cash flow is the priority. The whole thing works on cash flow.
Ace of spades, deuce is wild.
If you have enough cash flow, it doesn't matter the amount of cash value, because you can keep recycling it because of the cash flow. But if you have no cash flow, the cash value doesn't matter. You can only use it one time in hopes that you could pay it back with whatever you did. If you focus on the cash flow and absorbing as much cash flow as you can, that's what he's talking about. It's all about cash flow.
I think, Joe, what you just said is so important. And I think it's probably what what all of the social media presence of IBC should be talking about, and very few people are, to my knowledge anyway. And it's honestly, it's something I'm still trying to wrap my mind around too. I've just had that realization lately that the way we've funded our policies, access to all this cash value, but it would be very irresponsible of me to take it out because I don't have a plan, a cash flow plan to pay it back. So it's there, but I can't use it responsibly right now. So it got me thinking, gosh, would it have been better if I knew then what I know now for some of that liquidity, for some of that PUA premium to go to more base so that I could pay this for longer, that I would have bigger dividends, that I would have greater permanent death benefit. So, it's, you learn as you go, and I'm not mad about it, but I'm just like, okay, I think my next policy, I just might be all base because I've got plenty of cash flow over here. I can recycle that and recycle that. But there's going to be an end to that. Once that PUA rider falls off, once the term rider falls off, guess what? I don't get to put that in anymore. And it just so happens that it coincides with my peak earning years. That's going to be terrible, right? So I'm trying to look ahead and say, okay, how do I rearrange or start something new so that I don't run into that problem when I get to be 60 years old and all of a sudden I can't pay premium anymore.
Yeah, some of the so that's so good. Like people will quote unquote, I hate this terminology. I really hate overfund a policy in the early. There's no such thing. If you overfund, you've mech'd the policy. There is a limit. If you go over that limit, it's mech'd. But they're trying to describe the idea of paying a lot of PUA premium instead of base to get as close to the mech limit as possible for X number of years. Remember I said, whether it's 10, 20, 30, it's short-term thinking. Then it falls off and then it's gone. It's like, man, it creates this almost lost decade of insurability where if you put too much in early, you can't convert the term insurance off of the policy. You have to wait until the permanent death benefit grows enough where it's not a mech, and then you can convert. While you wait, you can't put any more PUA in. If you pay PUA premium in that time period, you're just pushing out when you can convert. You have to wait until the 360th day on the last year to convert. It's like, meanwhile, so now you're restarting the whole thing 30 years from now? Why would you do that? That's just, I don't know. I think if you could picture a wheel with from a mill where they generate electricity, it's like if you flood the size of the wheel, if the stream is too small, the wheel doesn't really spin. But a very small wheel could be in a really powerful river and it just spins and spins and spins. It's like that's what we're talking. The cash value can be very small, but if you've got enough cash flow, you don't need to worry about it. And it's not, but you shouldn't fear base premium. Base premium will eventually be cash value. It will be accessible in time. Most people are just afraid of that time frame because they don't have a good understanding of their cash flows and what actually needs to happen. So they rush to get early liquidity, sacrificing that long-term ability to pay premium. Becca, you were looking at the cliff of when all that stuff falls off. It's I think it was 10% of what maybe it was a $2,000. It drops to $2,000 premium.
Yeah,
Right when
not much.
right when your policy is seasoned humming.
Mhm.
Every
Yeah.
dollar of premium increases by X, and now we're going to cut that to 2,000. Why
Okay.
would you do that?
Great example from real life from my backyard right here. We have a beautiful big mulberry tree in our backyard. It was one of the reasons we bought our house. It had a tree house in it. We're like, oh, this is gonna be amazing. Our kids are gonna play in it. Um, and the reason in this area, the reason people planted, I'll say that I don't think they still are. Maybe they are, but the reason people choose these trees is because they grow so quickly. So this tree is probably, I don't know, maybe 20 years old, maybe 25 years old. I don't know. It's big and beautiful. However, mulberries have a really fatal flaw in that their root system spreads out like this. So now it's getting into the foundation, like it's caused a crack in our back porch. And my husband's like, we got to cut it down. Like it's going to tear up everything if we don't cut it down. So it was planted for the rapid growth. But now, 25, 30 years later, we're looking at having, well, it's not a small expense to cut down a tree like that. Let me add that as well and start over. Like, I don't want to not have trees in our yard. So we can plant an oak. It's gonna be
50
a
years.
while.
Yeah.
It's gonna be a while. Whereas if they would have started with an oak tree, yes, it would have taken longer. But then we would have a tree in our yard that would last probably longer than us. And so I think it's that same kind of thinking and I have to fight it. I for sure do. Of what's faster, what's quicker, how do I see a result the soonest, right? And we're sacrificing that long term for that short term gain, and you don't realize until later that probably wasn't worth it.
I'll relate this to business. So there's a potential client, and they're thinking they want as much liquidity early as possible because they're going to do some stuff with their business and so on and so forth. And then the question came up, it's like, cool, so what's the plan with the business? Well, in 20 or 30 years, I'm going to sell it so I can live off of the proceeds. It's like, so where's that money going to go? Well, I'm going to live off of it. And it's like, so you're going to pay cash and discount all of the future growth on that massive lump, like millions of dollars of a lump sum. As soon as you pay cash for things, all the growth's gone. The bank's not paying you any more interest. So that's what you're going to do with the lump sum. So, well, could I get it in this? So it's like, not with this design. This design cuts off in 30 years. This design shrinks from 100,000 down to 10. Right when you get the big lump sum, it's like, oh crap, where do I put it? It's like all of my policies are 90-10, so where do I put it? I was like, well, maybe we need to rethink this. If we're starting with the end in mind, if we know the goal is a future huge cash flow, maybe we should bake that into the equation. We want to make room for windfalls.
Yeah, that accounting
you
for
gotta,
windfalls, that's a principle from Nash too.
Mm-hmm.
Oh yeah, that's David Stern's edition. I love Becca's imagery there. That tree that grows real fast, and now you got to cut it down. If they would have done it right, quote unquote right, if they would have planted a different tree, it would have met both needs. It just wouldn't have showed up in 5 years. So the hardest part of this, and I think not enough of us really focus on this, if you're going to take a long-term approach, there's we'll say incomplete liquidity period. I don't like saying non-liquid. It's still partially liquid. It's a partial liquidity period. If you can get through 5 years of partial liquidity, which is in Nelson's book, if you can wait 5, 6, 7 years and deal with partial liquidity, you've got the oak tree for all future generations. And because you did it, the next generation doesn't have to, because they got the cheat code. Right? You already bought it on them, so when they take it over, it's 20 years deep. It can be an all-base policy with layered on PUAs on top of like majority base. They're waking up with this thing humming, and they do it for the next generation and the next generation. But if you get so focused on the microscopic instant liquidity, man, it's going to be a struggle getting the next generation and the next one and the next one.
Mhm.
You're going to violate a lot of these rules at some point, right? You're not going to have a place for a windfall. You're going to use up all your insurability. It's going to be a struggle. It's going to be a fight. Whereas if you just take the medicine and suck it up for a year or 5 or as long as you possibly can, the end result, 1 generation, 2 generation, 3, like it's a beautiful future.
Mhm. Well, it's like you say all the time, Joe, is that if your goal is accumulation, then you're going to look at that differently than if your goal is absorbing cash flow, right? So if your goal is how much cash value can I get, then that's a very different mindset than how much cash flow can I run through this system for as long as I can, right? Because ultimately, that's what we're wanting. That's what's going to be the most beneficial. And like you said, if you'll just be patient, you can have both.
Here's so the limits that no one really mentions. Like everyone will talk about a MEC limit, but I've run into a lot of people that are talking with many agents that don't even talk about the maximum insurability. So that's the quote unquote human life value. We'll say maximum opportunity cost or maximum earning potential, different ways of saying the same thing. There's a finite amount of insurance all collective insurance companies will give you. That's one limit. There's premium affordability. They're not going to let you, like you got to do some funny stuff if you're going to try and do this, but they're not going to let you put every dollar into this. They won't accept that as premium. They won't accept 100% of your income as premium. So there's a cap there of how much you can pay. There's a cap on how long you can convert or pay PUA premium or pay, like so for example, one company has like a $5 million lifetime limit that you're allowed to pay in PUA premium. You're also only allowed to pay it until 75. You're only allowed to convert until 65. So if you have a term policy that can convert, only till 65. You can only buy a new policy currently until 85. So if you're adding up all these like limits on you, and so you've got to make some really good decisions now. Remember I said about the pointer, the laser pointer, you have to make rational, good decisions now for the long term, knowing, hey, I'm not going to be able to do this forever. If I wait until tomorrow will come and they'll be like, oh, can't do that one. Can't use a PUA anymore. You're 60, you're 76. There's no more PUAs for you. Now it can only be base if you get through medical underwriting. Because you didn't buy, you didn't convert early in life. You didn't buy it earlier. So like it just changes the way you look at this problem when you look at all of the limits, your actual goals, if it really is long-term generational planning here. Like you can't James Nethery calls it like a Frankenstein policy or like a really tiny, as minimal base as you possibly can. If you're going to take that approach, you might as well just put it in a savings account. You can collateralize a savings account. You can collateralize a CD. Buy term for 20 years. It's the same effect because the term's going to fall off and hopefully you did all these wonderful things and have enough assets. And if your goal is contractual planning, there's a you understand what's going on. You know what to do.
I feel like our conversation started out so fun, so palatable, and then I blink and we are in some deep waters. I'm saying that to say for people that are listening, because you never know where this is going to find people. If they're real early on in their journey, if y'all are real early on in your journey, feel free to put comments. Again, I said this at the start of this conversation, but I'm thinking about it now, so I'll say it again. put any comments or questions that you have about these things that Joe and Becca were just talking about, going back and forth. That's deep. It's deep water. And that's why it's so important to work with somebody who practices this infinite banking the right way in their own life. And then you work with them as a professional. And also why I think it's so important that we have these conversations out loud for everybody to be able to listen to this, ask further questions, etc. Because y'all, I'm telling you, one moment and then blink of an eye and we're in the deep waters right here talking about really important stuff, but stuff that I'm telling y'all, I feel like, it took me years and years of listening to various places and people to try and get to what y'all just covered and talked about in a briefly, much shorter amount of time. Does that make sense? So, I'll tell you this. I want to give some credit to y'all, and folks could perhaps benefit from listening to this stuff again. Joe, you made me look at that description, which I've read numerous times, obviously, at the beginning of Becoming Your Own Banker about the whole 95% versus 5%. And I don't even know if I know how to say it out loud, how to describe how you made me look at it different, but it just sunk into a different level, a deeper level when you described that static number, that net worth number, or that accumulation number, because that's what it is. If you did take all the money, spread it out evenly, hey, we've all got 50. We're at a 50. That's where we are. Okay. But in 10 years, we're not all out of 50, and it's not for any other reason other than human problems not addressed necessitated that cash to flow away from people who didn't address those human problems. And I don't know. So I don't know if I said that well out loud for how it hit me and struck with me, but I just think that was so interesting that you were able to say that in a way that I feel like I understand that at a deeper level now, even though I've read it many times before. So I want to say thank you for that. I also want to thank you for referencing Becca's book earlier, because again, going back to that one point about how can we teach the next generations or our clients' next generations to appreciate what they've started, I think it is with books. I think it is with education. I think it is with topics and discussion and, some of these other interactions that we've talked about, like Becca, you and your daughter. Well, you actively took her over to the computer screen and said, hey, look, here's your policy. Here is that value in there. Do we want to make a policy loan so we can cover that down payment for this? Why, yes, I do, Mom. So intentionally, purposefully interacting with them, pointing them towards education. I believe I've mentioned to both of y'all before that I like hosting family events, family meetings regularly. And that's something that I've decided to start incorporating. And actually, I mention it for that intent and purpose, but also here with y'all, I have had the idea, and maybe I'll just spring it on some new folks that'll join us next time or whatever. Maybe I'll do it right now. We'll see. Of just saying a number, between, say 1 and I'll just pick a number here, 86. Like that becoming your own Becca, right? Just throwing a random number out there, okay? And then I say, Becca, you're up. The number's 16, and you got to go to page 16, and you got to tell me something about what sticks out to you concerning the grocery store, So doing that in family meetings, doing that in this round table. Go ahead, Joe.
Let's say, like the way Becca was describing educating her daughter, like guiding her over to the computer, log in, look at that value, da 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 da. Yeah, you can't, when you're in college, you go to college or you go to any high school, the teacher doesn't send you an email and say, okay, I guess you learned it all. Right? You don't earn a degree from college professors just sending you an email. Like there's reading, there's testing, there's conversation, there's application, right? So all of that Becca did. Becca's an educator, so she knows all this. I don't know. but like you need to be able to doing that with your kids, with the next generation. And for us, all of us could probably do that better with our clients. You can't just send them, like I do this a lot, I'll send a summary email. That's great, and it's a good milestone marker, but that's not enough. I can't just send a bunch of emails and think, all right, now Jesse gets it. We have to have a conversation. I've got to ask you questions. I got to check where, what is your thought pattern here? What's the framework you're thinking through for this particular problem? It's like, there's got to be more to it than just, hey, watch a video and sign on the dotted line. Like, there's got to be an education process, a collaborative self-discovery journey where you are helping the next generation, or your agent, your advisor is helping you discover this, peel back the layers over and over and over, refine your understanding, gain more and more clarity. That's so good. Thank you for that example, Becca.
Yeah, you bet. Nelson used to say, the more you see you didn't see. Right. And Joe and I just came back last week. We were at the Nelson Nash Institute puts on a coaching academy once a quarter. And so they had one in Dallas. And I thought this was really interesting. One of the very first presentations, Mary Jo Ehrman, who wrote Farming Without the Bank, she did, her job was the introduction. Okay. I had none of this highlighted. Who even reads an introduction typically to a book, right? I'm the type that kind of skips over the introduction and just get to the good stuff, right? But she pointed out, she was like, almost every objection that we get frequently to infinite banking is right here in the introduction. It tells what all it's not. It's not a sales tool. It's not about investments. It's not about rates of return. It's not a procedure to get rich quickly. It's not a tax qualified idea of any sort. That's all on page 1 that I just pretty much skipped over, right? So gosh, there's just, if you take this book and you dissect it, there's so, and Joe's one of the best I know at this, of just really diving in and trying to see what's there that's maybe not on the surface. And there's so much. There's so much.
Speaking of diving, I don't know if you have a few more minutes. I was just going to say, one way to gauge, I was thinking of this. I don't know if this is the best explanation. I'm still thinking through how to actually explain this. But so many people will look at their policy and say, they'll take their ledger, which is fake, by the way. Just Nelson says it. We all, like, agents know this. It's all fake. Everything on that page is fake. Like, they printed it as if today is going to continue for 100 years into the future. Exactly the same, Groundhog's Day. It's not real. So when someone says, I'm going to compare this number to that number, realize what you're doing. You're comparing a proposal that we all know is fake. But people will focus on those ledgers and say, this column compared to that column means some type of rate of return. And I was like, what's a better way that you could look at this to say, what do we know is real? And is there a way we can use that information to gauge if we use if we created a policy that is efficient? And what I came up with was, if we can use insurability to absorb cash flow, so the premium and your insurability, those are two numbers that are real. Today, the insurance company collectively as an industry will give you X amount of insurance. That's your insurability. Now, you could say over time, if I earn more, I have more net worth, that number goes up. Generally, it's declining over time. But we'll take that number and then say, how much premium can we pay for that number? Maximum amount of premium we could pay for that number. That is the most efficient you can get in terms of absorbing all of your cash flow. Using your insurability to absorb as much cash flow as possible. So that's like 100% on the scale. If you take your policy and say, well, I used all of my insurability, but I only captured about 1% of the cash flow I could have, that's a really inefficient use of the insurability. Right. So if we stick to that, it becomes very clear to say, and you got to look at it year by year. So it might look like for the first 5-7 years, it looks like you're 100% efficient. 10 years, 100% efficient. It might even be 30 years, you're 100% efficient. At 31, if it drops to 1% efficient, it's like, oh man, do I want to do that? It gives clients and advisors a way to speak the same language about banking, realizing it's about cash flow. To say, are you okay with this dropping to 1% in your peak earning years when you sell that business? When you sell those 50 properties and you have millions of dollars, now we can't put it in. We can't pay the premium. When people say put it in the policy, they mean pay premium. It's like all of a sudden our right, our contractual right, has gone from here to there. Is that what we want? Or do we want a little foresight to say, we know that's going to happen. We need to make room for that for when it happens. Ironically, that would mean the efficiency that I just described is higher. You're paying, in the book, he says you want to pay as much premium for as little death benefit as possible. That's essentially what I just said. He wants the highest efficiency possible over the course of your entire life. I don't know. I put that out there, and hopefully that stirs up. People can ask questions. I'd love to hear people that are agents, are not agents. What do you think of that? If you look at your insurability as a finite, how much cash flow can we absorb with that insurability? That's a more honest representation of what this principle should be, this concept should be.
Yeah, I wouldn't be surprised if you're saying that for the first time and maybe don't even recognize the genius of how that's worded or how it's striking me. I wrote it down. Use insurability to absorb. I like that. To absorb the cash flow. So yeah, that definitely made me think of, wow, what a great nuts and bolts topic point to talk about. Well, it does matter how policies are structured. It does matter the structure of that policy, taking into account whatever system of policies you may or may not already have in place. That does tie into the use of convertible term insurance to be able to lock in, to be able to absorb more of that insurability in a strategic way to be able to build for banking purposes. And so that's big right there, and that's very practical. And I'd love to see questions and comments on that as well. And Becca, you can give your thoughts on that one. But I wrote it down. Use insurability to absorb cash flow. And I did also write down that we should return to this no matter how much I feel like we cover it right now. But I also wrote down, and it's tied into what you said just a minute ago about, that business owner. The idea is to build the business real big, get it up to a big number, right? Sell that business, make the exit strategy, real common approach, have an exit strategy. And then two things struck me about the back end of that scenario, which is hope, and that's not a guaranteed, right? We hope to get up there. We hope to get up to the big number. Boy, we could do a lot of infinite banking in the meantime because everything we do between now and the exit strategy is finance. So let's not disqualify that out of our thinking and planning. But let's just take that assumption and say, yeah, we are going to sell that business for a big old number. Well, two things stuck out to me, and one was you're sitting on a pile of money. I'll just give it to you. Let's say you're sitting on the pile of money. And your point about, well, just spend it down. I mean, just spending it down, that's the best back end of this big plan. And that's the best you got. And we're not going to say that in a mean way, but I'm trying to say it with some emphasis right here for consideration. Your plan is to only give that mountain of money one job, to use it one time, one way, in one fashion. It could be more efficient. So that's the big glaring part right there. And then what was the second thing that stuck out to me? Is it somewhere? I mean, I got a page of notes, y'all. Y'all gave me a page. Y'all are just dropping nuggets here. So I'm trying to say my takeaways out loud so that everybody else can hear it a second time. But the second part of that was, I remember it now. I see where I wrote it down. Going back to the windfalls, money must reside somewhere. Capital must reside somewhere. It has to go somewhere. So when I said pile of money that you're sitting on, you're not going to drive around with that pile of money. You're not going to go to bed laying on that pile of money. So it does have to go somewhere. And you are going to spend it down according to that guy's plan or current plan, right? Hopefully he saw the light. But if it must reside somewhere, that really should make us pause and ask these questions about where's the optimal place for me to be able to put that and have the most advantageous characteristics. Well, obviously, we're talking about properly structured whole life policies from mutual companies that pay dividends to create a system to accommodate that capital so that you can give those dollars multiple purposes and not just spend them down. It's just a good question is what I'm saying, Joe. Thanks for sharing that insight on that particular case right there, because people are aspiring to pursue their career, to sell their business, to do whatever, and I don't think enough thinking is going into the back end of what happens on that side of the deal, right?
You might want to. So imagine this. Okay, you sell the business, Jesse Inc. Boom, millions of dollars. Who gets paid first?
Who gets paid first? Tell me, walk me through the iterations of how many people touch the money before we do.
Let's simplify it. We'll simplify it to, how about the IRS? The IRS wants their pound of flesh. Uncle Sam. So let's say it gets chopped down by whatever percent. This is a big number, and you probably have fancy people on your team that say, we're going to do an installment sale, kind of a buyout. So we'll pay you over like a 5-year period, something like that. So you don't get hit with your nest egg gets chopped in half by Uncle Sam.
And all those professionals are going to get paid, and I'm not disparaging that, but I'm just saying you got to account for that.
Now you get the net number, what's left to spend. Well, scroll down on your policy to year 30 or whenever we're hoping to sell, and look what happens when you pay premium to the increase in contract value. I bet the number is more than 1. So if you paid $1, I bet it's more than the value increase is more than $1. So in a way, if your nest egg gets chopped down by all these people to 70%, and then it's paid as premium, where it gets this multiplier impact, it's almost like you get the full value if you do it this way.
Or more.
Or more. It's probably more, but maybe you get a full value. And when you paid the premium, like you get all the premium you pay is kind of like your in the investment world be your cost basis. You get to take that money back for free, tax free. So if you paid the premium, you've also increased the cost basis, which means the next dividend gets received tax free. So there's a lot going on here, but you could pay premium, the step up, you recover all the taxes, and then the amount you paid in premium gets returned to you tax free. You can set your system up to do that if you want. You don't have to. But if you're working with Jesse or Becca or someone very competent in this, they could set up this type of system to say, we're expecting a multiple 6, 7, 8-figure windfall around this time. We need to have capacity with our insurability at that time to receive the money, in hopes that it's seasoned enough that it will increase at this multiple, so we can pull this off, all on a contractual basis. It's like there's a lot of really cool planning you can do with this that you can't really do with a lot of those other places or warehouses you were describing.
Yeah, sorry, I thought you were done. Listen, no. I'm sorry, Joe. I just got to profusely apologize. I listened to all these recordings that we've done now together, and your wisdom just continues. And I recognize that I cut you off. I'm sorry. I'm going to be better about it. I'll work on it. I really do. Yeah, sorry. I started to jump in and say that I had a conversation with an individual that I've been in touch with since last year. And, there's this screen recording stopped. Sorry. Y'all probably didn't even see that on your end, but I'm tapping my machine out on space. And that really is a pity. Oh, my goodness. Okay, yeah, I get it. I'm getting notifications. But I'd been in communication with an individual since around this time last year that was waiting on a settlement. Well, sure enough, we got in touch here recently because the settlement came through and we got this big windfall that they're obviously looking to be very prudent with, make a good strategized decision to be able to protect it, cultivate it, all of it, right? And by the end of our, hour-long discussion, and we've had multiple other discussions, but here's where we are now, she comes back to me, she says, we need to schedule another phone call, which I love. My only goal typically with any phone call is I just want another one, because you're probably getting new information. You're interested. You're going to think about that. And you're going to come back to me with even better questions next time. And we just keep ratcheting up your level of understanding. But there does come a point where it's time to implement. I get that. But typically my mentality is just, I just want another phone call. If you're interested, like I'm interested, and we get another phone call, it's going to be great. It's going to be great. And she finished that hour-long conversation that we'd had. She said, I need to pay more premium. I need to think more about this. And take your time, because that is the right answer. You've referenced James Nethery at least once. Joseph. I'm reading instead of just calling you Joe by looking at your face. These names are distracting. If I had ADHD, I'd blame it on that right there. He says premium's the solution. You tell me your problem. That selling the business premium's the solution. You tell me you just got a settlement, premium's the solution. You tell me you're an employee just trying to pursue your career, do the blue collar thing, premium's the solution. Like, I don't care what you want to go on a trip to Europe, right? Premium. That's the solution. That down payment for Becca's daughter was there because she paid a premium. So let me do this. My devices are tapping out saying, all right, y'all are giving us too much quality information. I could keep going, but I did promise that I was going to get to some rapid fire questions to Becca. Joe's given some rapid fire answers. I'd love to be able to get that. So again, let me say that anybody watching and listening, if you want to see us take a topic further, put that down in the comments section. If you're inspired, of course, to have a conversation with Joe, Becca, reach out to them. Their info is going to be in the show notes. Read Becca's book. This has been a great, y'all. I took a page of notes. I'd love to revisit all this. I'm looking forward to the next time. I know that y'all are going to be excited to meet these people, or once you meet these people that I'm looking to invite on. I'm really excited about the scheduled upcoming roundtable councils that we have. Becca, you're in the hot seat. Are you ready for your rapid fire questions?
I'm ready.
Okay, just nice, easy out of the gate. What's a recent favorite book or podcast that you've enjoyed?
Oh, man. Okay, so there is a guy named Jamie Winship that a friend of mine introduced me to probably about a year ago. And I just think he just tells some fascinating stories. He's like a Christian CIA, Jason Bourne type. In fact, he knows the real Jason Bourne. Like, he knows this, that character was based on a real person, and he just tells some wild stories that are true. And it's expanded my faith. It's just fun to listen to. Like, for real, like, that's what, I didn't see that on the news, but that's what was really happening behind the scenes. Anyway, so that's been really, that's been one I've binged on quite a bit.
That one question, and I'm so intrigued. See, that's why these are great. I love that. Me and Joe are you send us something. Okay, we need to hear more about this.
Okay. He also wrote a book recently called Living Fearless. That's really good.
Okay. I love that title.
I would highly recommend. Yeah, isn't that great? I mean, who doesn't want to do that?
On that point, for anybody, this should be encouraging. I never see where Jesus said, be afraid. Isn't he always showing up saying, fear not, fear not, fear not, fear not? So that living fearless, I love it. Okay, here's the next question. What's your favorite all-time fictional book?
Fictional book. Okay, I hate to say this. I can't remember the last fictional book I read. No, I take that back. I was into some kind of like end times, like Middle East kind of this. I don't even know how to say it. I don't read a lot of fiction.
I could give you an easy out and say movie if you want.
Movie? Oh gosh.
One of your favorites.
I'm so bad at picking favorites. Okay, one of my
Didn't you
favorites.
have the shusher? Wasn't that
the shusher? You ever see Home with your kids? They look little aliens and have the shusher. My daughter was actually saying she was thinking about getting that for my youngest son for Christmas. I'm gonna give him a shusher. Like, I don't know if she meant to use or for him to use, but anyway, there's a movie I really like that we went and watched again recently called Secondhand Lines. Have you ever heard of that one?
Yes,
I'm bad with actors and I can't tell you who's in it, but that was a really great movie.
Michael Caine, Robert Duvall. I normally wouldn't be able to do that, but I know that movie, so there you go. I do. I love that one. What's one of your favorite quotes or mantras, sayings?
I think I've probably said this before on your podcast, but this is really my go-to of look where you want to go. Are you going where you look? And just apply that to anything. Have a goal, see where it is, and then it's just kind of a accountability check for yourself. Okay, life is not static. Every action, every decision I make is either moving me towards that or away from it. So am I going where I look? Talk is cheap, right? I say that this is what I want, but are my actions and my decisions moving me in that direction?
What's one of your go-to healthy habits?
Healthy habits. Oh, I could probably do a lot better. I try to drink a glass of water every morning.
Yeah.
First thing. That's pretty easy. Try to work out at least 3 times a week. You know, I was a basketball player for a lot of years, and I hurt my knee my senior year in high school and decided to play on it before I had surgery and all that. And the doctors are telling me, oh, by the time you're 35, you're going to need a knee replacement. I don't care. Nah, they'll have a way to figure that out by then. Well, it's kind of caught up with me. So I can't do all the things that I used to do and want to do, but try not to let that slow me down too much. Pickleball. I mean, I can still play pickleball. That's like play at the senior citizen center, right?
There you go. Let's all work on the glass of water.
There you go.
Everybody should hydrate. How about a bad habit that you've broken before?
A bad habit that I've broken. Oh gosh. Diet drinks. Those are really bad for you. I used to drink a bunch of that. And
what'd you do to break them? What'd you supplement it for? What stuck out to you to make you make that change?
Well, you know, I guess I just started trying to be very conscious of drinking more water. And
there you go. You substitute it for the water.
Yeah. And, you know, I just realized that I feel bad when I drink a lot of these. So that's not so hard to put 2 and 2 together.
Yep. Sunrise or sunset?
Oh, I do love sunrise, but I probably don't get up for all of them. So I'm going to say sunset.
All right. Beach or mountains?
I would say mountains, because I just think I live for hoodie weather. When I can put on a hoodie, I'm so happy, and so love that in the mountains.
That's what I'm talking about. What characteristic do you value most?
Oh gosh, like in a person or in just in general? Like, I guess that would have to be just wide open. I think humility is really important. You know, of just, I think if you can be humble, then what that says is I'm open to learning. I haven't arrived. I value what you have to say, the input that you have, or vice versa. So that'd be up there in the top anyway.
I love it. I love it. What is, or who is, lost it. Who's the most impactful person in your life, past, present?
Oh, wow. The most impactful person. I would have to say Jesus Christ. Is that allowed? Like
of course.
That's
real person, definitely allowed.
Yeah. I mean, that's, you know, really try to sew into that relationship just like I would any others, and can certainly do better. Can certainly do better there. But yeah, that's definitely had the biggest impact in my life.
I've really been rolling around a dichotomy there of, and I'd have to think about how to even say how it's been rolling around in me right now, that's the person I would most wish to please, and yet that I must certainly most often let down at the same time. Does that make sense?
Okay,
Isn't
can I
that
challenge
something?
you on that for just a second?
Yeah.
I'm bringing a quote. here.
Yeah.
Bringing a quote from a song. He says, this song from a group called Maverick City. And he said, I wasn't holding you up. So there's no way I could let you down, or something to that effect. Of just like, sometimes I think we put so much pressure on ourselves of, oh, I've got it. I can't let God down. I can't like he runs the universe, dude. Like you're not holding him up. You're not, like you're and I think that so often we're so hard on ourselves when maybe God's encouragement to us would be like, you know what, you're doing a great job. You're doing a great job. Like just keep on keeping on. Keep doing what you're doing. It doesn't have to be perfect. It doesn't have to be polished. Man, just keep after it. I don't know. That's maybe a personal. Go ahead, Joe.
Oh, no, I love that saying.
All right, so I was thinking about this on my flight back from Texas, and we hit turbulence, like crazy turbulence, for like.
Oh, and did that
I
make
don't
you
even know how long.
start talking to the Lord Jesus?
It made me start thinking of think back, like the disciples after Jesus. What happened to the disciples?
They went back to fishing.
Well, didn't they all suffer a really
Yeah.
terrible death?
Oh, got you.
Right. So like we're talking like upside down crucifixions, beheaded, stoned, like all types of crazy, treacherous, torturous things. When I read that as like early in life, I thought, wow, they were so like on fire for the Lord. And it was like in that moment when I'm watching the plane go like this and people are like panicking, I wasn't. And I'm like, I don't know why I'm not, but I'm not. And it hit me that it's like the disciples weren't like superheroes. They just received the grace from God where they understood no matter what was happening, no matter what, it was okay. Like you don't have to be like, fear not. You don't have to be afraid. You don't have to be afraid of the thing. Like I imagine as they're like about to hammer he's like, he'll forgive you. Like as the axe is like, right, it's like, he'll forgive you. He'll still forgive you. Just ask. It's like, once you see it, like, man, it's not about you, right? It's hard to explain, but it's like the only reason you're able to do it is because of him. Like you're not letting him down because you're not perfect. That's not what this is. Right? The only way you let him down is when you like the relationship is broken. Like when you don't let him do the lifting, the heavy lifting, the sin, the proxy work that he's got to, you get to leverage his perfection so you can get into heaven, right? Salvation. Like when that's broken, that's the disappointing part. Not because you're like, oh man, I drank too much last Tuesday. Oh man, I cursed. Like the sin is already here, man. That's not the letting him down. Like you're walking with him, you're not letting him down. That's what I would encourage you to that. You're not letting him down. Like you're walking with him, you're not letting him down.
Yeah.
Like the marriage feast at Cana, we've saved the best for last, I feel like. I love it. I'll ask this last question because I mean I could spend a bunch of time there, and I love it. I think that's the best for last. The last rapid fire question for you, Becca, is: would you rather be able to breathe underwater or fly?
I think fly for sure.
Gotcha. I got that one from my boys for a while, so that's their contribution to the rapid fire questions. Y'all, any closing thoughts? I'm looking forward to next time. It's already scheduled. I've got a new guest coming. I think y'all are going to have a great time when we interact again. But anything else this talk?
When you bring them on, could you do like one of those like question mark over their face so we can't see who it is, and then you like reveal it as like, look who it is.
You might be asking a lot from me technologically, but I love the idea behind that. So I'll see what I can do. Anything else, Becca or Joe?
I really enjoyed the time. Love talking to you both, and look forward to the next one.
Awesome. All right, y'all, go out and conquer some things on your own quest, and I look forward to seeing you back at the round table. Appreciate y'all.
Thanks, Jesse.
Awesome. So that was an absolute pleasure for me to host another installation in our round table. If you have questions, feel free to put them down in the comment section below to be able to reach any of our guests. Also see details in the description. If you'd like to learn more about how to live and leave a lasting legacy, have a conversation with me. We can pick that conversation up at durhamtalents.com. For now, have a great day. Take care.